I think they will have to be very comfortable with clients coming to them with portfolios that are potentially built on AI and asking for their advice. But I think that advice component will remain fundamental.
Hello and welcome to this week's Tea Break. I'm Ali Al-Enazi and I'm delighted to be joined by Gareth Wilson, Executive Vice President and Global Banking Industry Leader at Capgemini. Gareth, thank you for joining us.
My pleasure, Ali. Great to be here.
And what tea have you gone for?
It was an easy choice for me, Ali. It's an English breakfast tea, I'm afraid. Just after midday, but I think we can get away with another breakfast tea, can't we?
I've gone for the classic Earl Grey, from the FT canteen. I guess it sharpens the senses nicely for a conversation on the seismic shifts in private banking. And of course, Gareth, we're going to start off with the Capgemini Wealth Report, with $83.5 trillion expected to pass between generations by 2048. But what stood out for me was the sense of urgency. And, we've spoken about this before, and you said the transfer is already underway and that a third of this wealth will change hands by 2030. What does this generational shift really mean, for traditional wealth management firms today? Are they adapting fast enough?
Probably not. We need to accelerate this transformation across the industry. It's a huge opportunity for the wealth management industry. As you say, $83.6 trillion of wealth that will transfer over the course of the next 25 years from their parents' generation to what we call next-gen high net worth individuals. The baby boomers, the Gen X's, the Gen Z's. But of course, those clients have different expectations. They have different requirements for a relationship with their wealth management organization. They're looking at potentially different asset classes. They're looking at higher risk, higher return. They are looking at more global, geographically dispersed and diversified portfolio. They are looking for services that go beyond, traditional wealth management. Takes us into the whole kind of concierge, trust, estate planning. But also they're looking for a relationship that's very much, founded on digital, but with a strong personal connection. And of course, the foundation of all wealth management industry is trust.
The appetite for alternative investments, we've seen this hunger reflected, in conversations across the industry from BNY and Goldman kind of opening up, access to private markets. And I also spoke to the CEO of Mirabel Bank, and he also told me it's a mistake not to include private assets in long-term allocations. But it's not just about new products. It's about education, understanding the risks, the liquidity, the timelines. And are private banks prepared to play that role, as educators and not just asset managers, especially as younger clients push into these asset classes?
Education is incredibly important. We look at many organizations that are investing. UBS has a specific program that's generated on helping the education of female investors. And again, as part of this great wealth transfer, we see a significant proportion of the wealth that will go to the female next-gen high net worth individuals. The Bank of Singapore, again, have launched a financial education program to help the future recipients of the wealth understand the implications of private equity, understand the implications of crypto. Our report shows that something like 50% of that next-gen high net worth individuals are interested in investment in a crypto asset class. Private equity, where's the liquidity? That's a key question that we have to look at with giving access to private equity. Potentially more growth focused, potentially higher risk, but also more complex.
According to the Capgemini report, 81% of next-gen clients plan to switch wealth managers after inheritance. That's an astonishing number, Gareth. When you speak to firms globally, what are the cultural, or structural blind spots they're facing? Is this a digital problem? Is it a product issue? Or is it something deeper, maybe more human?
They really need to truly understand their clients, particularly in this future high net worth individual scenario. They need to really make sure they've got the products and services that meet those requirements. And again, we've talked about different asset classes. We've talked about investing in digital platforms to ensure that we bring real-time information And we've talked about bringing additional products and services to bear, traditionally outside the traditional realm of the wealth managers, and the private offices and the family offices, have a role to play on that basis. We need to make sure that the relationship managers are equally relevant to the baby boomers and the Gen X and the Gen Zs as they have been to their parents' generation.
I had this interesting conversation recently with Mark Goddard from Lombard Odier. He says that Lombard Odier is making a deliberate shift to support UK entrepreneurs much earlier in their journey, well before the IPO or exit. They're talking about building emotional as well as financial connections, especially post-liquidity. Do you think this model of banks becoming long-term thought partners for business owners is what the future of private banking looks like, or is it too idealistic, in an industry driven by assets under management?
We have seen the growth in terms of absolute wealth and the growth in terms of high net worth individuals in geographies and regions like APAC, for example. And much of that is driven by entrepreneurship, and much of that is driven by the digital transformation. So I think organizations looking to build relationships, build trust at the early stage of those journeys, I think is really important. The client opportunity and client segmentation has to be much more sophisticated than it has been traditionally.
We can't have this conversation without talking about AI. Briefly, you've spoken positively about the potential for it to transform the wealth sector, not just in efficiency, but in building, more personalized, responsive client experiences. And I also spoke to innovation leaders and futurists at the recent PWM Wealth Tech Awards, and they told me that digital transformation, hinges on people, not platforms. But in an industry built on, discretion, legacy, and trust, how do you strike that balance? Where does AI genuinely elevate the advisor-client relationship? And where do we need to draw the line?
It's a feature of our society, and it's going to be an increasing feature of our financial well-being. And I think for the role of the advisor, for the role of the relationship manager, I think they will have to be very comfortable with clients coming to them with portfolios that are potentially built on AI and asking for their advice. But I think that advice component will remain fundamental. I truly believe that the role of the advisor and the human dimension will continue to play a material role, but it will be the combination of those two. And that's why the wealth management industry needs to look at how do they invest in talent, and how do they invest in their relationship managers for the future, and how do they give them the tools and capabilities to support their clients in combination with that human dimension.
It's clear that the wealth management industry is not just facing a new generation of new clients, but a new definition of what value means. Gareth, thank you so much for joining us.
My pleasure, Ali. Thank you.
That's a wrap for this week's episode. You can catch this conversation on all our past episodes on the PWM website or our YouTube channel. If you have questions for our guests or want to dive deeper into today's discussion, everything you need is just a click away. See you next week.